Hi guys. Okay, first of all, thank you very much for joining us tonight and devoting your time to this masterclass. I'm going to share with you my findings in this particular industry, and if you after that want to trade and make money using it, so you're very welcome. Okay. Today we're going to cover a very interesting industry. Everyone is aware about this industry. It's called the medical services industry, and at least once in a lifetime, even if you're the healthiest person, you still require those services because you have to be born, right? And usually people are born in some kind of maternity hospitals. And but definitely you understand how important to have this industry. And we're going to speak about specifically that particular part of our economy, but also we're going to identify one company, even though I'm going to speak about 3 companies, at least in some places. But then we kind of deeply will analyze only one of them. Now, before I start, a disclaimer, especially for guys who are new and just learning how to invest, you have to understand that it is an educational masterclass. I'm not giving you any advice to go and buy it, okay? You have to make your own decisions, okay? And please, can you put from 0 to 10 how you understand that? Any decision you make on the stock market have to be based on your understanding of that particular stock, industry, and the strategies which you're going to use, all right? So can you please acknowledge that by putting in the chat that put plus or whatever, yeah, that you understand that. And then we'll go ahead and proceed from there. All right, fantastic. This is a good thing. Now, what's our plan for today? First of all, we're going to look at the current market situation because it is important to know what is happening generally in the market. We'll look at different indexes. And after that, we're going to analyze in details medical service industry. And we'll look at pros and cons which are happening right now with this specific industry. And then we're going to analyze one specific company which called CNC or Centene Corporation. Okay, some of you who are member of our investment club, we already discussed this company during our meetings, and some of you already probably traded this company and made money. But for general information for people who are not in like elite investment club, so probably you don't know this, and that's why we prepared it. But because right now in the market it's quite difficult to find something good, and probably this is one of the best companies which presented right now. And in the end, I will tell you a couple of news about our academy, just to let you know what is happening here. All right, let's start from Dow Jones. As you can see, Dow Jones is at the peak historical highs. Right? So as we can see, it's from 2008, it's monthly chart, so one candle is 1 month. And we can see that usually it's went kind of to the slow track, like a low part of this trend, uptrend. And for the last 3 years, it was kind of an uptrend. And we see this huge fall, which kind of returned the price to the uptrend, but and the bottom of that particular trend, which was happening from 2008. And then we bounced from there, and now we're again at the highest high, which is historically was in that particular index. Now, for people who don't know, Dow Jones includes 30 biggest in it, so it's kind of a composite index, which includes 30 biggest companies by its capitalization, right? And that's how it looks in the like in a smaller period of time. So we can see this is the pandemic. I hope you see my mouse, right? So this is the pandemic last March. We can see the drop to nearly 1900. From the top to bottom, it was about 37% drop. So quite huge drop. And now we bounce back. And as we can see, at the moment, we're at the highest point. For the last few days, it's kind of bouncing on the same level. And because it is the highest high, and a lot of traders, they expect the pullback, and that's what we can see right now. So what we can expect based on technical analysis, we definitely can expect the pullback at least to around those levels. We can see this is line, and sometimes this is the trend, right? In the middle line, we can see sometimes we're under it, sometimes we're over it, sometimes we bounce from the bottom to top, right? At the moment, we kind of, for the last several rolls, we're at the top of the trend and the top half, and easily we can go to the kind of bottom of this top half, right? So if we break it, we're going to go first, kind of second level of support is going to be the kind of the bottom line of this green trend. Okay, that would be about 29,000. Now, even if we drop on that level from 31,450 to 29,000, it's 2.5 thousand drop, so which roughly around 7% drop. So you have to understand that even it seems like very small, it's still 7.5%. So if you are fully loaded in your portfolio and you have around $100,000, you can expect that an average is going to drop around $7,500. So don't be afraid of that. If you chose fantastic companies, great companies, they're good for long-term growth, but still that could be the volatility in your portfolio you have to expect. Now, if you are planning to enter positions, so you might think about it, because remember, even fantastic companies, even good companies, usually what happens when the market goes down, they are pulled down as well together. There are some companies who which go against the market in general, but still, majority of companies, that's why indexes, when indexes go down, it's like they include all these companies there. All right, so be careful. If you're sitting in cash, maybe it is a good time just to sit in it and wait until the market kind of at least does this wave, and then already to consider the entries. All right, and especially when it's not only the price is so high, it's the valuation in general so high, because we compare now with the earnings for indexes, and you will see that it is overvalued quite a lot. Now, if we go for Standard & Poor, it's very similar. So we can see from the bottom of last year around 2,190 here. So at the moment it's 3,900. So it's like it's 80% growth. It's huge. I mean, and this growth happens because people are just putting money in the stock market trades. People don't keep money in the bank because they don't get any interest in it at all. So they're trying to buy some dividend stocks, which at least paying them 3 to 5% dividends, right? It's one thing. But secondly, also because government printing so much money now, and a lot of people, they have high disposable income right now, so they have more money left in the end of the month than previously, and of course they need to put this money somewhere, and a lot of people choose stock market. And of course, when a huge amount of volume of cash goes into the stock market, so the prices are growing in general, so this might affect this. But again, remember, whatever goes up usually pulls back down as well, and that's where the best time to buy, not at the peak. So at the moment is the highest point. On Friday we can see that the green candle, so actually Standard & Poor, if we compare it to Dow Jones was kind of on the same level, kind of dodgy, whereas Standard & Poor moved up even higher. Okay, that's what we see. And if we expect to pull it back down, so at least in the bottom of this green trend, but if we break even lower, I wouldn't be surprised if it goes to 3,200. So quite easily, you know, so return to that particular trend, and that would be 700 drop, and that's close to 20%. So I wouldn't be surprised if it happens. This is in a kind of low scale, so that's what we can see. Again, so I just repeat, so definitely we can expect about 5% drop to the bottom of this green trend, but then if it breaks through those levels, so I wouldn't be surprised if I see it on 3,200. Now, Nasdaq, remember that Nasdaq includes companies, if Standard & Poor includes 500 companies from different sectors and from different sides of the companies, small companies, medium companies, and large companies, whereas Nasdaq mostly 100 tech stock companies. And you probably know that last year, tech stock made very good kind of move, because like technology stocks, they actually profited from the pandemic situation. Okay, and Nasdaq moved much higher than previous two indexes. Now again, we can see that it is highest high historical again, and easily we can expect it to pull down somewhere here to around 12,400. Okay, again, so even if you're planning to buy some tech stocks, think about it. Maybe when they pull down a bit lower, so you can buy at 5-7% lower of the current price. Okay, this is about indexes, major indexes. Also, I want to show you VIX. VIX, it's a like volatility index or index of fear. And as we can see, for the last 6 months, right? So we roughly bouncing from the $21 level, okay, somewhere. And now last Friday, we broke it and we went to nearly $20 level. So it's actually the lowest since the March of last year. Maybe here we touched the same level in the end of last year, but then we quickly bounce back. Now, as a protection, last move up here, I used it. I just sold puts and made money on the growth. So remember that when the VIX goes up, usually all other indexes they go down. Okay, so they kind of opposite direction. So if you want to protect your capital, and you see that stock market, like general companies, are going down, so you kind of know that the VIX is going to go up, and if you know how to use options, you probably can profit on that. Roughly around 5%, you can definitely receive if you selling put options here. But be careful, because the index can drop to $11, which was last year, and in this case, selling naked put would be dangerous. So you have to fully understand how to use the strategy, guys. Okay, and only whoever passed this option trading course, or if you learn the options trading somewhere else, so only in this case you have to know how to implement them, right? Because especially that you cannot buy VIX and sit on it, right? So it's cash settled index. Now, and in order just to explain why I believe that indexes are very high, I want to show you the screenshot from Wall Street Journal, and to show you what the P ratio for those indexes. Now, P ratio, for those who don't understand, it's a price to earnings ratio. So it means if you pay $1, how much investors are willing to pay for this $1 profit. Okay, and I presume you understand, if somebody pays $10 for $1 profit, it means that within 10 years, they're going to return their investment. Now, if they pay 30 times, it means it takes nearly 30 years to wait until your investment pays off. So look at this. At the moment, Dow Jones Industrial Average P ratio is 31. Okay, so for $1 of profit, for companies which are included in that index, people are paying now $31. Now, if you go back 1 year ago, you will see that last year, for the same dollar of profit, they paid only 22 times. So it means that for the same profitability, people are willing to pay now nearly 50% more. Why is that? Why would you pay for same thing which made you so much money now 1.5 times more? Usually it happens when people believe in something. They believe in growth, or they believe something's happening pretty good. And I don't believe that the economy is in a fantastic shape right now. Like government prints so much money and supporting all these organizations, which probably are not supposed to be even supported. And when it stops, we will see the effect of it. Okay, so definitely we will see. Now, if we go to Nasdaq and Standard & Poor, we actually see the situation is even, like the level is even higher. So at the moment, as we can see, the P ratio for Nasdaq is 40. So people pay $40 for $1 profit for the companies included in Nasdaq, and 44 times, nearly 45 times for companies included in Standard & Poor. It's just insane. It's really, really high. It's the highest multiples for my history. How many years I invest, I've never seen something like that. Okay, and again, if you go back last year, it was 25 and 29 only. And if I just took the screenshot and saved it, which we were doing in July 2020, and if you look at the July, so it was July 2019 here, so you see it was only 18, right, for Dow Jones, and 39 for 25 or 23 for Nasdaq and Standard & Poor. So guys, definitely you have to understand that the market is overpriced right now, okay, overvalued, and it cannot last forever. So If something happens on the market, usually it affects the price and the indexes start falling. And at the moment, they're very, very high. So if they're something very high, it can drop very low. So you have to be very, very careful when you choose the companies. And especially for 2021, if you believe that this pullback might happen, so you have to choose the companies which are going to stand any economical problems, okay, in the country. So that's why it's very, very important. Okay, this is about the index itself, guys. So William's asking, Igor, what your thoughts about selling puts but verticals on VIX? You mean bull put spread? That's what you mean, Williams? You can do that. I mean, yes, like any bullish strategy on VIX will do. Definitely not buying calls, because call is extremely expensive. But yeah, if you see that you can sell bull put spread, try it, because you're protecting yourself from the bottom side as well. So it is kind of a good strategy. Yeah, you can have a look at this. But every time you calculate your profitability level, right? So every trade is different, because you might get today what you won't get like 2 days ago. So you have to count everything.